Now, in this video, we'll be talking about a wedge. A wedge is another trend line price action patterns that actually forms on a chart that you can use to become profitable, right? Now, what is a wedge? A wedge is a triangular pattern that appears on a chart, and it comes that touches different um, points of the price on a chart. Now, there are two types of wedges. There are rising wedge and falling wedge, which is a bullish wedge and a bearish wedge. Now, you can always find a wedge on the chart patterns on the chart, right? So in this video, I'll be showing you how a wedge is and how you can become profitable trading a wedge. Now, this is how a wedge look like. Let me draw it first before. So this is how a wedge looks like, right? This is how a wedge looks like. Now, this is a rising wedge, right? And then this is a falling wedge. And this is a falling wedge. Can you see it? This is a rising wedge, right? Like, this is a bullish wedge and this is a bearish wedge, right? So now, a rising wedge, right? A bullish wedge always goes down. A bullish a bullish wedge always goes down. Price will always go down. And a bearish wedge, price will always goes up. I take it again. When you see a bullish wedge like this, a rising wedge like this, the price will always go down. And when you see a falling wedge, a bearish wedge like this, the price will always go up. Did you get it? So now let me go to the chart so I can understand what I'm talking about. Now, on jump 25, we have there is a wedge here, right? You can see a wedge here. You can see a wedge here. Look at it clearly. Like I told you on the flag, that price must touch the base of the trend line, not the body. Now, where the trend line is now is the body, right? Now, where the trend line is now is on the wick. So price will always touch the wick, not the body of a trend line. That is the proper way of drawing a trend. Now, this is a rising wedge. This is a rising wedge. So this is a rising wedge. So what price will do is that, as you can see here, the price have touched here, and then it broke, right? Now the price have gone up. The next action price want to take is that price want to come and touch this other trend line, and where to touch this trend line might be somewhere around here. Once you touch the trend line, break the trend line, then it will now come down. So like I said, a rising wedge always goes down, right? A rising wedge, like a bullish wedge, always goes down like this, right? And then so now, this is what price will do. Price will come down, but first price will go and mitigate. Price must first go and mitigate here, but sometimes price might not reach here, right? See what price will do. Price will create a double top here. So you can see here, it's creating a double top, right? It's creating a double top. So what this double top means, that there's a rejection here. Now let's go to 4 hour. If you look somewhere around here, there's a rejection. Are you seeing the rejection here? I see the rejection here. So price so what will price do? Price will create a double top here and then come down to break this trend line the third time. On breaking this trend line the third time, sorry, the fourth time, it will have to cover what is called a fair value gap. If you look here, I think I'm going to talk about a fair value gap too. If you look here, a fair value gap. What is a fair value gap? Fair value gap is the space or the price movement or the fast price movement that price left when it was actually moving. As you can see here, price will come and mitigate. Price will come and cover this gap here, this candle here. Price will come and cover it, right? And then it will now go up, right? So what we're expecting price to do is that price will come down to break this trend line and then come here, right? Come here to cover that fair value gap and then goes back up, right? So that's what I'm expecting price to do right now, because here is an imbalance. The market is leaving some money on the table here, right? So I think that would be the best explanation. Price is leaving some money here on the table. So what price will do is that price will come here and come and mitigate this trend line. It will come and mitigate this part here, and then it will now go up. So that is what price is about to do here. So that's what price is about to do here. So now what will happen? What will happen? Now, most times, from what I've seen on the chart, most times price neglect the second touch. If you look at here, this second touch here, sometimes price, because of the rejection that happens here. Remember, I told you that when there's a third touch, price goes to the opposite direction, right? Now, sometimes price will neglect this second touch and then make this third one a second touch, right? That is what you have to learn. Price will make this third one a second touch. How do I mean? If you look at it here, if you look at what I'm telling you, right? Are you seeing this? So this line here is where that imbalance is, where that fair value gap is. So price will come down here, come and break this trend line a little bit, and then go back up again, right? So that is how to trade a wedge, right? So if you want to trade a wedge or a pennant or a flag, sometimes price neglect this second touch here, because price is coming to take people's stop losses here. So price will neglect this second one. From what I've seen, right, it will come down, make this third one a second touch, break the trend line, and then go back up. So what I'm expecting price to do here is that price will come like this. Let me so price will come like this. So price will come like this, right, and then go back up like this, right, breaking this other one and then retesting here. um, all right, retesting here, and then price will go back up again. No, price will go back up again. So this is what I'm expecting price to do on this chart, right? So this is how if a wedge looks like. Now this is a rising wedge. How do you know a rising wedge? A rising wedge is that the triangle faces up. That's what is called a rising wedge. The triangle faces up, while a falling wedge, the triangle faces down. A falling wedge, the triangles goes um um a falling wedge, the triangle goes up. The sorry, a falling wedge, the triangles goes down while the price goes up, while a a bullish or a rising wedge, the triangle goes up while price goes down. So I believe you understand what a wedge is. Now, if looking at this right now, price, like I said before, price will not just go to touch here, right? Because of why? If you go to the 4 hour, you can see, oh my goodness, what have I done? Now in the 4 hour, you can see this order block here. So price would respect this order block and come down to break this trend line again the third time, and then launch up to take out the people stop losses on this point. So that is how a rising a wedge is. So do a screenshot for me of the wedge you have seen. But meanwhile, let's look for another wedge. Let's look for another wedge. Uh, let's see. All right, beautiful. Now this is a bearish wedge. Very good. Now this is a bearish wedge. This is a falling wedge, right? Now remember, I said a falling wedge price goes up, right? A falling wedge price goes up, and then a rising wedge price goes down. So you can see here, price touched here, came down to touch here, right? So okay, let's draw it properly. Let's draw it properly. Don't make mistakes when drawing your trend line. So price touched here, came down touch here, went up here, going to touch here. As you can see, there are 3 touches here, meaning that this point is strong. So price have not come to mitigate here, right? So price is going up, right? Like I said, told you, a falling wedge price goes up, and a bearish wedge price goes down. So price is going up right now. So once it has, okay, now if you want to catch your TP on this trade, this is how to catch your first TP. This is how to catch your first TP. This is our first TP, right? So before price will come, let me take this off. Now before price will come down here, right? Before price will come down here, will come down. Before price will come down here, price must first of all get to our first TP. So what price will do is that price will come and touch this trend line, right, and then go up again to touch our first TP, bounce back, go up again, right, then to now bounce, to now come down, come and touch this other trend line here. So that is how, as you can see here, this is a good example of a falling wedge. A falling wedge goes up, a bearish wedge goes, a bullish wedge goes down. So